back joining me this morning from Shaw and Partners is David Bosio. David, good morning.
Morning, Andrew.
Still grim times here, David. Gold heading for its fifth monthly drop, I believe. So still stuck in a bit of a rut.
Yeah, that's probably a nice way of calling it. It is certainly not pushing high at the moment, and every time it does try and poke its head up, it does get beaten down pretty quickly. So we're still in the call it the mid 1700s. Certainly still profitable territory for the producers, although I think the gold price itself doesn't seem to be the main issue affecting the producers. It's definitely more the cost equation for the miners, but also sentiment around the sector. I feel that the gold equities are in the naughty corner at the moment until such time that we can build a little bit of euphoria and investors start to see some tailwinds building there. But at the moment, yes, it's this long cold winter in gold continues.
Do you reckon we'll see some improvement before the end of the year?
Yeah, I definitely do. I think it just really comes down to competing forces as well, and where the attention's going in the marketplace. And I feel gold has a role out there, and at the moment, it feels like a lot of the attention is firmly around the battery metals. So the lithium players, the rare earth players, nickel, copper, they seem to be getting a lot of attention. Coal is back in fashion. If you look at stocks like Whitehaven, for example, they've had absolutely incredible runs over the last 12 to 18 months. So a lot of these other sectors seem to be getting all the attention. Gold seems to be a little bit of a barometer for sentiment for, I guess, where inflation's going, fear and greed, and sadly, it's right now it's hard to see what makes the gold trajectory itself change. But often, if you're a contrarian investor, that's often the time when you start laying your bets, because when the trade is obvious, it's the underlying prices has typically moved already. So we'll see.
A lot of attention too, David, on the rare earth players. What do you make of Andrew Forrest's buying into Hastings?
Yeah, so it was quite a significant transaction last week. So for those who do follow the sector, Hastings is one of the more advanced developers in terms of building a mine, and they're located in the Gascoyne region in Western Australia, and they've been at it for over 10 years. So they've built resources, and they're well into the funding cycle of the development. They have also secured offtake agreements with some buyers, but they're looking to essentially mine and process rare earths, particularly NdPr, which for many people, we're starting to better understand these battery metals and critical metals, but a big component in the EV market, as well as magnet technology, which again feeds into renewables, etc. But what we did see on Friday was Andrew Forrest's private group, Wyloo, came into Hastings with a $150 million, essentially a converting equity facility. So it's almost treated like a debt facility, but ultimately it does convert to equity at Andrew Forrest's election. So it's a significant position. I think it gives him a stake in the event that it were to be converted of just north of 30% of Hastings. So he takes a dominant position in that company, and the rationale behind that transaction, as was reported to the market, was really to enable Hastings to invest in downstream processing. So they've actually made a contemporaneous investment in a refinery in Europe. So it's gives them a whole, I guess, ability to say that we can take rare earths from the ground in Western Australia and actually process it into a saleable product into the European markets. So phenomenal transaction that's really lifted all the neighbours. So there's a number of groups that are really taking advantage of, I guess, this renewed interest in rare earths in the local market. But you look at the big end, we've got companies like Lynas, which many people almost overlook, but I think they're capped at about $9 billion at the moment. but only and trading at around $8 or $9 a share. But only a few would have been 12 months ago, maybe 18 months ago, Wesfarmers lobbed an unsolicited takeover approach. And I think that was around the $2 mark. So you can see how much has changed in a relatively short time. So it'll be interesting to see whether Wesfarmers' appetite for rare earths continues, and they perhaps try a bit harder to get access to that sector, which is certainly in favour at the moment.
Good to speak this morning. David, thanks very much.
Terrific. Thanks, Andrew.